Good morning and welcome to another edition of the OFX Currency Couch. Well, we're coming off an interesting end to last week where the Australian dollar touched two-year highs, rallying through 80 cents and comfortably moving through that resistance threshold that we spoke of last week at 80.30. We actually touched fresh highs above 81 US cents, and despite a correction into the close, we now look to some key events this week to see whether these levels can be sustained. There's not much on the macroeconomic docket today, and in fact there's not a lot of action into the first 3 days of this week, and we're looking to Thursday and Friday to really see those key indicators drive direction further. In the interim, it will be US dollar weakness, the threat that Hurricane Irma poses to GDP expectations throughout the rest of the year for the US, and of course moving into next year as the cleanup begins. And our focus now shifts to inflation data out of the US on Thursday, our own employment data locally as well Thursday morning, and then some retail sales numbers out of the US on Friday. There is a suggestion that we are due for a correction in the Australian dollar given commodity prices are beginning to reach levels that are perhaps considered stretched. Copper is certainly overvalued and iron ore is due for a downward movement as well. And perhaps these levels of the Australian dollar can't be sustained and we will see a pullback below that 80-cent threshold. But while US dollar weakness governs market direction at the moment, there's certainly scope for this short-term gains to be maintained throughout the week. Thank you.